Matthew Garnet, thank you very much for coming in today.
Thank you for having me. Thanks, Matt.
I know it's
I'm not going to say your last name because I butcher it every time.
That's okay.
Sarah Felipe.
Sarah Felipe. Yeah, it's a mouthful.
Look at that.
It's a
Not
mouthful.
bad.
No, you're doing good. You're doing good.
Yeah, thank you.
Yeah, it's thanks for coming in. It's a little bit of a shitty day today in North York, but election day.
Get out, do your civic duty. I did that at 9 a.m. this morning. You don't get a right to complain if you don't vote. That's what they always say to me, right?
That is true.
If you vote, you have a right to complain.
That is true.
I voted, I can complain.
That's true, right? Exactly. Well, you're participating in the process, right?
That's right.
I have some buddies that saying, "Oh, I don't want to vote." I said, "Well, you can. There's a thing you can. I don't know exact word, but you can go in and you can just like rescind your vote, so it's counted." I forget.
Is that on the ballot, or I didn't see that?
I don't think it's on the ballot. I think you have to. I forget. It's if you look it up, because another one of my buddies did it. You go in person. You sign up this way. It's like on the record, and you kind of you give like a blank vote.
Oh, so like
kind of like a vote in protest
or something? Is that what that is?
Yeah, I guess it's like to do it in protest. It's like a vote in protest, saying you're not satisfied with any of the choices, but you still showed up and made that decision. But anyways. Go out and vote, guys. So
go out and vote. Interesting times here in Ontario, right?
I know, right?
Oof.
Oh yeah, big time. But I just wanted to say, get to know you a little bit more. So you're the vice president of Holt Meadow Group.
Yeah, I'm the senior vice president of business development for Holt Meadow Group.
Nice.
So we're a third-party property management company for multifamily purpose-built rental assets.
Okay.
So we manage for our own assets, but we manage third party for others as well.
Third party, okay.
Yeah.
Okay. So you have your own portfolio, and then you also expand your services to others.
Yes.
Okay.
Yeah.
Cool. So how did you get into that?
Interesting, sordid past. No, I have a background in real estate development and home building, as you know.
Okay.
And I had a bit of a track record with some multifamily. But when this opportunity came up a year and a bit ago, I had, there was a bit of a pivot going on which we're now seeing full circle with our condo community right now.
Oh yeah.
And this opportunity came up to come into a established rental development company and look at their property management and take it more third party other than just managing our own assets. So that's how I got into it. I think they wanted somebody who had some background in the brokerage world, which I've had a license for almost 25 years. Had background in home building, which I have as well, and development, which I have as well. So with all those things put together, we found a fit that worked for Holt Meadow and for me, and I came on board, and we're enjoying it. We're really liking it. So that's how I landed here.
Absolutely.
Yeah.
So they focus on. You guys have been focusing lately on kind of doing purpose-built rentals, helping developers pivot into that. That is
yes. So thank you. So we're going right there, right? So right to it. Look, so Pine Mount Developments is the parent company for Holt Meadow Group. Okay. So Holt Meadow Group, like I said, is the property management company.
Okay.
Pine Mount develops and buys land, entitles it, develops it, builds it, and we manage them. We stabilize them, get the tenants, manage it, run it, collect the rents, distributions. We look after all that.
You handle all the landlord tenant board, all that.
All of that. LTB, all of that. Tenant vetting, you name it, we do it all, right? Now we have seen a shift in the market where the large 6 property management companies here in Ontario, they've amassed huge portfolios of thousands of units under management, and they may not be so apt to look at providing their services for that kind of missing middle, for those clients who have 50 units or 100 units. If they don't have a certain number, they're just not answering the phone. They're not servicing the client, right? And we felt that was something that was needed to still give but institutional level service to a non-institutional client, right? When I say institutional, I mean, do you have 1,000 units? Do you own 1,000 units or 500 units, right? Not everybody's, BGO or Bethel Kennedy or, not everybody's, that large, or Cap Reed, or Starlight, you know what I mean? So But it doesn't mean that they don't have a valuable asset that needs proper management.
No, of course not. And it can grow too. It could expand, right?
Well, exactly.
More, yeah.
100%. And if you're managing your own asset, to the best of your ability, there's a certain number of units you could probably manage on your own, and you don't need somebody, 5-plex, 6-plex, 3. You can do that and still have a life. You know what I mean?
Yeah.
But when you get to that critical mass where it starts becoming a full-time job, and it starts to take away from your ability to work with your real estate agent, your realtor, and go find other opportunities because you're so busy worrying about the day-to-day with the 20 units you have, or the 25 units, or the 40 units, or the 50 units, with all the tenant complaints and vacancies and LTB cases, or working if you want to try to get an above guideline increase in AGI because you put some money into the building. Right. Do you even know how to do that? These are things that I think we lend a value add there to do these things for you, to free up your time to live your life and go with your realtor and focus on acquiring more assets.
Sure.
Right?
I think a lot of people think that in being a real estate investor is a passive investment. I don't think that is, based off what you just described, right? It's not passive in the least.
Armchair investment is there early one. Look, there's a certain adage to that. To be able to, CRA taxes it for that very reason a certain way, right? Mm-hmm. Buy the asset, stabilize it, get your rents, look at the expenses, pay them off, and let the asset manage itself.
Right.
Okay, great. But who's doing that? And we've seen buildings fall into a state of disrepair. We've seen, tenants get, tenant organizations like Acorn show up at your door because you're not looking after the building and you become a slumlord. And, these things are real problems that, buildings do depreciate. Everyone says real estate doesn't depreciate.
Wow.
Got it. Yeah. Land might not unless you contaminate it. It doesn't. Right. But buildings do.
Of course,
right?
yeah.
They're like people. You got to go to the gym. You got to look after yourself. You got to look after the building. And, if you're not living there and you're not so in tune with it, sometimes these things fall through the cracks. And that's why it's great to have a property manager who looks after it for you and says, hey, that boiler, hey, that flat roof, hey, the parking, hey, the surface parking, hey, watch out for these things, help you put together a capital plan so it doesn't sneak up on you and hit you all of a sudden.
No, for sure.
I've got a huge bill I got to, fork over, right?
Yeah.
And having professional property management to do this for you is something that really helps safeguard your asset, but also gives you time to go live your life as well.
Of course, yeah. No, I see the value in property management. I'm part of the board. I'm part of my condo's board of directors. So we work directly with the management. And it's not a rental building; it's a condo, but still the same thing. There's a building to maintain. There's timelines. There's engineer reports. But the guidance from the management is essential.
100%.
You can't go without it.
Yeah.
And there's a big difference between well-run buildings and not so well-run.
Oh yeah.
Yeah. Yeah. And I think investors maybe don't realize that they don't want to spend the money today, but it's either pay now or pay later. And usually when you're paying later, it's worse. More. Yeah.
It's worse.
Yeah. Things start manifesting and, everyone's unhappy and it's just a big mess to clean up after.
And a lot of times it's reflected in the value of your building.
Oh, for sure.
Right?
Yeah.
So your rents may be under market, you're not maximizing, your asset to the top potential it can, which directly when you put your cap rate on it, you affect the value of your building, right?
Your vacancy could be higher. Who wants to live in your building? That type of thing, right?
Yeah, for sure. Handling turnover, if you've got under market rents, legacy tenants, how do you work with that? What do you do? There's things that we do. We have staff in-house.
Of course.
We've built this organization and we have professionals on staff that deal with this sort of thing where, the client who's doing it on their own may not be able to do it and might get themselves into trouble and be, you might get one of those problem tenants who pays a couple of months and then doesn't want to leave and you have to go through the process.
The professional tenant.
Yeah, that, yeah.
We've had experience with that. I'm sure you have as well.
Oh, yeah. Get out and vote.
Get out and vote.
Let's get someone to look at this RTA and fix the LTB, right?
Yeah.
That's what I think.
Well, we were talking about this the other day. I think you were saying some regulation needs to be rewritten. Would you say it was from the 80s?
Yeah. The RTA, the Residential Tenancies Act, is the main piece of legislation that the LTB it enforces, right? Okay. Much like on the planning side, you have the Planning Act and then you have the OLT, right? So you have the RTA and the LTB. And I think in order to help the LTB become more efficient and to become more fair, not so overwhelmingly one-sided, which I think we could all agree it is at this point.
Well, it's, yeah.
Right?
Yeah.
So I think you need to first address the RTA.
Okay.
So there needs to be amendments and changes made to the Residential Tenancies Act in order for the board to enforce it.
Right.
And I think you need a strong provincial leadership to do that, who, maybe doesn't need as much cooperation from the House and everything.
Right.
And because you will get a ton of lashback on that from tenant advocacy groups and others who will just scream that it's overwhelmingly in favor of the landlord, when right now it's overwhelmingly in favor of the tenant.
Yeah.
So I think we need to see the legislation itself amended so that the needle moves somewhere close to the center.
Sure,
So
of course.
It can't overly favor landlords, to be fair.
No.
And it shouldn't overly favor tenants, which is the current state of affairs, I think, to be honest.
No, I agree. I think a big thing, too, is there's a backlog to have your day in court. Right?
Yes.
What is it, like a 6 to 12 months wait
12
time?
months, yeah.
We've had clients where the tenant stops paying and you're out rent 6 to 12 months. If you most people have a mortgage on their home, so it would be after a few months you might be in a state of foreclosure, right? So there's some big repercussions.
We've heard of that,
yeah.
where people are relying on the residual income or the auxiliary income from the tenant, in a smaller residential play, and they don't get it, and then they fall into arrears and they end up power sailing the place, right?
I think the tenant doesn't understand that because they think, okay, I'm not paying rent, I'm gaining the system, but they don't realize the domino effect, right? It might be they might be the last, the beginning of the cog that makes the whole fiveplex collapse, and next thing you know, the 4 people that are paying rent are out of a home as well. So it's larger than themselves, is what I'm trying to say. In most cases. Yeah,
that can be the case.
Yeah.
So I think the tenant, and to your point, there's the difference between, going into, a smaller, situation, whether it's a fiveplex or whatever, and then having it owner-occupied run versus going into a professionally built, purpose-built rental with a professional management company run it.
Right.
There's, you know what I mean? There's no real concern that the thing's going to go power sail on you if one person out of 50 or 60 or 80 or 100 or 200 or 300 doesn't pay, right? Because you have a professional landlord and a professional management company running it, so you know that there's security in that, right? But right now, I think the bigger problem, the microcosm, is we have a lack of housing, period.
Right.
And that's on both, for sale, freehold, and on rental. Okay. Yes. The housing crisis is, to me, the starter of all of this, right? With more housing that's available for everybody, whether irrespective of the tenure, whether it's for lease or whether it's for sale, it will give more options and more availability for people to either buy and or rent.
No, for sure.
And that is a huge problem that we have to tackle right now. And I'm not certain how that's going to be tackled. We've had people like Marlon Bray and Richard Lyall, and you look at Councillor Brad Bradford in the City of Toronto right now advocating for greater densities, as of right densities, without having to go through this 3 to 5 year entitlement process, right? On the planning side of things.
Right.
So I think reforms need to happen on the Planning Act and the RTA to streamline things, to allow the developers to get out and build more, to give more units to people to either rent or buy, to kind of take the pressure off, the supply crisis.
No, I agree. Well, to your point, I was looking just before the podcast. I was looking at some stats. So
I love stats. Go for it.
Smart. So this is from Smart Prosperity Institute. They do like a rest of Canada average benchmark. So they were saying already in 2021 there was a pre-existing shortfall of 471,000 homes in 2021.
Wow.
And they're saying we need 1,034,000 homes from 2021 to 2031 to account for all the growth, all the
sorry, a million growth. And what?
1,034,000. But if you add the pre-existing shortage, you're at about 1.5 million homes
that was
required
the number I was telling you
in 10 years. So, and I don't have the stats on how we are in terms of progress on building, but I don't think, especially with this climate, I think we're probably well below what we need to be on a yearly basis.
So if you were to take 1.5 million units, homes, residences, whatever you want to call them, dwellings that need to be built by...
In 10 years.
Yeah. And you amortize that by the 10 years, you're 150,000 per year.
Right.
Okay, we're nowhere near that on our building starts.
No.
Like building starts are the permits to go and either build a rental unit or a freehold
whatever,
unit.
Yeah.
Okay, we're like at best half that.
Right.
Okay, and that directly comes through the system, which is a political system under the Planning Act, which is through your municipalities, right?
Right.
Vaughan, Richmond Hill, Aurora, Toronto, whatever. And when you have your submissions and your packs, your pre-application submissions, you go through these things, and the process to buy that piece of land, just to get to the point where you get a building permit to go and build it, can be 3 to 5 years.
And that's before shovels hit the ground.
Correct.
Wow.
So if we can't figure out a way to drastically reduce that process,
we're screwed.
There's no way we're hitting that target of 1.5 million homes in 10 years.
No.
Right. No. So that's why I went back to my original statement that we need strong leadership and we need a complete overhaul and a drastic change to happen.
Right.
It has to happen. Or affordability will just be like a joke. Like there will not.
Well,
be
it already is. It already is a bit of a joke. I mean, even with we saw a bit of a correction after the hot market, but things are already starting to turn around. Condos are still suffering, but even so, a condo is still expensive in Toronto. 2-bed, 2-bath, you're in 700,000 price range for a condo, and that's out of reach for most people. So especially first time home buyers. But I was going to say I'll give some credit to the mayor of Vaughan. They cut the development charges by half. I believe it's only for residential though. But kudos, that's great. I think we need more though.
Look,
way more.
Vaughan did it, and somebody else followed suit. I don't know if it was Mississauga or somebody else followed suit.
Oh, that'd be nice.
Or Brampton. Two of them has followed suit.
Right.
I think when you have, a development group, that a group of developers that gets together and has actually gone public, kind of like Matt Young from Republic and Stafford, Jonathan Goldman, and guys like that have all gotten together and said, "Hey, here's what the development charges are."
Right.
And when you have like a federal candidate running for prime minister of this country, Pierre Poilievre, for example, who goes out and says 1/3 of the cost of a home is taxes, development charge is a tax, right?
Of course.
So, community benefit charge, Section 37, it's a tax, right? There are so many application fees, everything else. When you look at all that red tape that creates those taxes, that directly really goes on to the cost of the home.
For sure.
And when you have developers that say, I'll tell you what, for every $1 you drop off your development charge tax, we'll drop $1 off for, whatever you want to call it, our profit or whatever it is. And I think people have to start to realize that profit isn't a dirty word.
No.
Okay,
No.
It's not a dirty word. It is not against the law to make profit. And nobody is going to go into a home building endeavor to lose money.
No.
It will not happen. And I think as a community of people here in Ontario and Toronto and GTA, we need to get over the fact that a developer is going to make money. Yes, they are going to make money.
Well, nobody works for free, right?
Nobody works for free. I mean, does ExxonMobil make money? Does Esso make money? Does Costco make money? They all make money. They have to.
Yeah.
That's just the reality of the way it works.
I think there's a way to be fair and make a profit, but we live in a capitalist society. To your point, that's the incentive. Or else, what is incentivizing us to leave our homes every day and go make a living and push forward our families, prosper? There's
Agreed. But so to your point, you need to be able to make a profit, but for construction of new real estate, condo, apartment building, it's all driven by finance.
Right.
And that's what people have to understand.
Right.
If you can't show a minimum rate of return, right, on that project, you will not be financed.
Right.
And when you drive up costs, and we're in an area now where we've got looming tariffs coming and a lot of uncertainty, you need to look at these costs very carefully because if you can't post that minimum amount of return, you're not getting financed. If you're not getting financed, it's not getting built.
Right.
And then guess what? No more building. Right. No more units. More housing supply crisis. Prices are going to continue to go up.
Right.
because it's a simple law of supply and demand.
Absolutely.
The more of something that exists, the less valuable it is.
Mm-hmm.
Right?
No,
That's
for sure.
just, I mean, you can play with, rent control. You can do all these wonderful things, but we've seen in the past it doesn't work, right? It doesn't drive down the cost of the rent.
No.
They tried rent control, right? And what happened as a community? The rental community en masse stopped building rental properties for 40 years,
Right.
since the 70s. They stopped, right? Post 2018, now you've got applications more and more and more for purpose-built rental communities,
Right.
being done by professional developers, professional home builders, by large institutions, banks financing it to give people a quality home to come and rent.
Yeah, because that rule, I believe if the property was built after 2018, it does not qualify for rent control.
Correct.
Okay. So that's what's spurred back this investment.
Yep.
Right.
That's right.
Right. Interesting. Yeah, it's a tricky situation, right? Because rents are crazy right now. It's a full bedroom home. A full home in the area we're in now, Toronto, is like $3,500, $4,000 a month.
Yep.
How does one afford that?
Well, I mean, ultimately, I think the idea, cohabitation or whatever it is,
multi-generational,
that's being looked at, and
Yeah.
the stigma is being lifted off those things. You know what I
for
mean?
sure.
Because there are other parts of the world where home ownership, like
Oh yeah.
go to Manhattan, like nobody owns a home in Manhattan, right?
Yeah, no. I'm Italian. I mean, our family back home, they live right beside each other, multi-generational. It's expected.
There you go. Perhaps, look, when people say, home ownership is a necessity, it's a must, it's this, it's that, respectfully, no, it's not. Home ownership is a privilege, okay?
Sure.
Shelter
It's a
is a
must.
necessity. It's a must, okay?
For sure.
So for those of you who, for whatever reason, in this market aren't able to have the down payment or qualify for the mortgage or whatever, there's still quality places to live and rent, right? We have to be able to give at least that.
No, I agree.
And with government incentives and programs being put in place for for purpose-built rental developers to continue to build their rental communities to get some relief, on the financing, helps them to continue to build these things while, our condo market fixes itself, recovers, susses itself out, and that might be a while. It might be a process, right?
Well, what I see is the difference. There's really no difference between a renter and a buyer now, except if you have a down payment or not, because the qualification's the same.
Yeah.
Landlords want to see last 3 pay stubs, job letter, credit report. I'm surprised they're probably going to start asking for your blood type soon. Like it's reference, and I mean rightly so. That's fine. You need to know who you're getting in bed with, but because it is so hard to kick someone out once they're in, right?
Well,
that's the
only
problem.
protection measure you have, right?
Right.
Like if like it's all snowball. So if the RTA is fixed and it's easier, you'll see a little bit more lax.
Yeah,
requirements pull back a little bit, right?
But in the current situation, I don't blame a landlord for being cautious in the beginning, right? Because that's after the initial screening, they have no other control over the situation, right?
No, you got to vet.
You have to vet.
Your vetting is everything.
Yeah, and we see a lot of fraud, a lot of, I think you have experience with this as well. Credit reports, job letters. There are actually certain, we've come across different individuals getting different job letters, but it's all from the same company. So I think there are individuals in the community that are trying to help, I guess, people get properties, but it's misguided, right? Because, then you are fooling the landlord.
Well, again, that's just, to your point, that's probably a little bit of a difference. That's where, you have a professional property management company that has a department of people on staff that actually do the vetting, besides just using a system, and just go, well, here's your T4, here's your NOA, here's your, your employment letter. And okay, I'll take it at face value,
Exactly.
right? And then what happens? Where you have a staff of people that actually do a more deep dive and check, okay, well, let's see, is John Doe really working at this place?
Right.
Let's take a look at social media, look at this, look at that, to double check things and just be certain that who I am considering renting this place to is who this person is and does do what they say they do.
Yeah.
And it's not necessarily, I don't want to think of it as Big Brother or spying, but it's, giving a level of protection that, hey, you're going to be able to meet your monthly obligation on an ongoing basis to occupy my space, right?
No,
and I think that's reasonable. I mean, a bank does the same level of due diligence when you go buy a property, right?
No, it's true.
So why wouldn't we do that when we're renting a property to somebody, right?
No, I agree.
When the bank has more recourse to get the person out of there than we do, to ask them to vacate when they're not paying us, right?
And then when they do eventually vacate, who knows what the state of the property is, right? I've seen things. I've gone on showings where the tenant left, but the property. It was actually it was a smaller property management company, but I had to tell them how the state of it was. They didn't realize there's, the banister is missing. There's holes in the walls. There's crayon. I don't know. This kid must have had to climb on top of the bathroom vanity because there's crayon on top of the mirror. Crayon drawings. So just outrageous stuff like that, and that costs money. At the bare minimum, it was a paint job, drywall repair, paint job. Who knows what else they broke? You're into the thousands of dollars, tens of thousands of dollars. So the rent you're collecting, was it really a profit? If you have to put it back into the home after?
You have to, I think every prudent landlord will have a budget that they typically put aside for what they call turnover. Right. And that's important to have that.
Sure.
That's part of your capital reserve. You put that money away. Mm-hmm. And again, this is all part of professional property management that helps you understand this and do this for your asset. So that when somebody leaves and oh my God, there's a hole in the wall. Oh my God, this doesn't work. That doesn't work. You're not surprised when you're going to have to call a handyman or somebody in to come or contractor and fix these things.
Right.
You know that ahead of time.
No, for sure.
You've been prepared.
And I don't want to get things twisted. There are definitely a lot of good tenants. Unfortunately, 100%. It's a small minority that really ruin it for everyone because those stories are the ones that stick. But I've worked with
always.
In the beginning of my real estate career, I did almost all leases. So I worked with a lot of beautiful families, tenants, good people. They are out there. It's just it's hard to get. You got to sift through. It's like anything in life. You got to sift through a lot of garbage to get to the gold. So But not to paint all tenants in bad light. There are most of them are good.
On that note, we're seeing a change. To be very frank with you, I don't know how you're seeing it, but we're seeing a tenant profile change now.
Oh yeah,
we're seeing professionals, young professionals. We're seeing in our communities downsizing seniors who have an abundance of money from selling off their asset with a realtor. You good folks at Remax West here, right? And they're like, no, we actually don't want to buy. We want to rent because we want to travel, or we want to do this or do that, or we're not sure if we're going to stay here in Toronto. Maybe we're going to end up, moving to Colombia, Panama, Brazil, wherever, Costa Rica. And some of them are just deciding that, we can rent a beautifully furnished rental and kind of invest our money and figure out where we want to go or what we want to do. So the stigma of, you're a tenant because you can't afford a property, I think that needs to be revisited, because there are people that are making conscious. No, they can afford the property, but they don't want to for various and good reasons.
For sure.
And I think that we as realtors and the investment community need to start to kind of look at tenants in a different light.
Right.
You know what I mean? It's not fair to just give them a paintbrush and put them all in that category.
No, I agree.
So I think there's changes happening on both sides.
Right. No, I agree. We have an aging demographic too, so that's going to be a big thing in the coming years. Already is. So.
For sure. 100%.
Yeah.
So transfer of wealth.
Yeah, I was reading about that. Yeah, I think they said it's going to be like in the trillions of dollars.
Oh yeah.
Yeah.
Oh yeah.
Yeah. Well, I mean, with the way things are going, you almost need that transfer of wealth in order to afford things, right?
So to any of those people who want to make that transfer of wealth, the check can be made payable to Matthew.
See, we have the same name, so it's easy, right?
That would be me. Just kidding.
No.
Yeah.
But no, it's true. It's happening. I mean, the baby boomers are on the way out, and there are new ways of doing things, and so I think sometimes there's still some old ways that work, but I think we do, like, to your point, need to make some changes, and how we view tenants, how we view landlords, and I think some government regulation would really help with that as well.
Agreed.
Yeah. I wanted to talk about this whole purpose-built rental. So just for the audience, it's a little new. Like, what exactly is your definition of a purpose-built rental? I know the name might be a little self-evident, but if you could just dive into that.
Yeah, no. So look, a purpose-built rental community is a community that from its inception, when you're going through the entitlement process to get the rezoning of the official plan amendment, the site plan to build that structure, and it can be as small as 25 units right up to hundreds of units, thousands of units. The design intent is to build the building to rent to tenants, not to have stratification of title to sell as condos to people. And there are different businesses, and there are nuanced differences within the floor plans and the construction of the actual buildings themselves. So it's a purpose-built rental, PBR, multifamily.
So I mean, so essentially, you could call it's an apartment building. It's a rental. It's a rental unit. And it's you've seen, especially with the way the condo market is right now. You've seen your company. I believe your company specializes in helping builders pivot.
Yeah, thanks for that. That's great. I'm very happy to talk about that. At Holt Meadow Group, we opened up 2 programs this year, which we're gaining a lot of momentum on right now. Almost not even ready to handle the amount of the.
Well, I think it's clearly required, right?
It's timely, I think, right? Look, at Holt Meadow Group, yes, we are property managers. Yes, we will come and vet your tenants, collect your rents, pay the expenses, opine on what the expenses should be. We have handyman, we have, paralegals. We'll handle the LTB cases and 11s and 13s, God forbid. Well, we deal with all that stuff for you.
You're one-stop shop.
100% on the property management side. But on top of that, I think because we come from a background of development and home building ourselves, we actually understand what it is to build a building. Have cranes in the ground, shoring, dewatering, bathtubbing, going through the design process to select, what materials go in the building. These things we understand. And right now we are seeing the compression on the sale prices and the retraction of, the condo community with some of the developments right now. Unfortunately, we are seeing some foreclosures and, we're seeing some receiverships happen. And we don't revel in that because we're part of the development community as well. But we are open, and we've opened up our RMI program, which stands for Rental Market Integration. And that is to go to developers who purchased the lands and had intention to build a condo, and for whatever reason right now may not want to proceed with that or can't proceed with that because of financing reasons, compression on sale prices, et cetera, and they want to change the tenure of the building. So tenure and zoning are different things, right? Tenure is the market-driven decision of the developer to either offer it for sale, i.e. stratification of title, condo, or lease, i.e. purpose-built rental, right? And for these condo developers who want to explore changing their applications from condo to rental, we offer a program to help them do that. We come on as a consultant, help them and advise them on, placement of things, material finishes, mechanical layout, because all of these things matter when you get your financing through CMHC, which has government programs specifically for purpose-built rentals. And the way you design these buildings, the things you put in them, all help you qualify for a certain level of points, which unlock federal money and give you preferential rates and preferential amortization periods in order for you to make it viable. But you need to know how to navigate that, and that's all we do. Like, we don't build townhouses or homes or condos. We only build and manage our own purpose-built rental communities. So that's been something that's been really, I think, helpful for people right now.
Can it be at any stage in the development process, or it has to be pivoted before shovels go in the ground?
Oh yeah, well before shovels go in the ground.
So once shovels in the ground, you're kind of committed to what you started.
Yeah, you're doing this, pre-SPA, pre-site plan approval. So, you're getting your NOACs, you're going through your zoning, you're coming up to site plan. This is when you're doing it with me. If you got building permit and you're done. You're done.
All right. And then maybe you have to see about receivership or something like that. There's a different option for you there.
We don't get involved in that.
So
we don't want to.
Shovels in the ground, you can't help them. It's more before then.
Yeah, pretty much.
Okay. But I think you do have another program where it's, you were saying how you help, if they don't want to, if they, let's say they got 50% of units that have not sold, or
Oh absolutely, yeah.
You want to talk about that one?
Yeah, no, thank you for that. So that's the second program we opened up this year. That's called our DB1 program, which is the default buyer plan.
Okay.
And what that does is that utilizes, that's 100% Holt Meadow, and we come into the developer who has a certain number of, or percentage of the building, number of units that unfortunately have resulted in defaults where buyers have not been able to close, walked away from deposits, or subject to litigation, or whatever the case may be.
All that fun stuff, yeah.
All that sexy fun stuff that lawyers love.
Yeah.
We walk in and we take those units that actually become like a de facto rental portfolio for the developer. So we act as their basically the buffer for the developer. So we find the tenants, we vet the tenants, we manage inside the four walls. We don't manage the condo, because the condo corp still has to be, because it's a separate part of the act. Yep. So we don't do condo management. We do purpose-built rental. But we can rent and maintain the actual units owned by the developer on a temporary basis, and we give them monthly distributions. And if there's a Terry unwarrantable fix, we defer that to the trades of the developer. If it's more tenant oriented, our trades and our handyman contractors will go in and fix that. And basically what it does is it gives the developer a bit of breathing room so that they are able to have some holding income on these units while they're figuring out what to do with their lawyers, whether they pursue the litigation, whether they're waiting for the market to come back or rebound, or if they want to not ever sell these units and just keep them as a rental portfolio, which some of them are really considering doing right now. So we've offered that. And now the reason a lot of property management companies aren't doing that is, it's confined within a condo building, and I think, they look at the units more like a temporary or like a transient type management contract. We're a little bit more nimble, we're more boutique in our practice. And because we are developers, we understand it as well. So we figured this would be something that would help the development community right now figure out what to do. So, I don't have a magic wand. I can't wave a magic wand and pretend it's never happened. I wish that I could.
We all wish,
I wish I'd been a little bit taller. I wish I'd been a baller, that kind of stuff. But at the bare minimum, I can come in, I can alleviate some of the pain, give you some holding income, and allow you to figure out what you want to do through your litigation period, a couple of years, if that's the route you want to take.
Okay. Oh, awesome. Okay.
Yeah.
So sorry, I jumped to that because I didn't want to forget. But going back to the purpose-built rentals, how difficult is it to pivot from a condo project to a rental project? I would imagine there are a lot of similarities, but there must be some differences as well, right? And how one designs a. Is there a couple main differences? I mean, because the plumbing, electrical is going to be very similar, right?
Mechanicals will be a little bit different.
A little bit different?
Yeah. Okay. Selection of materials, definitely different. Placement of units can be different for dynamic pricing on your rents. Management office, very different. The amenities are different. So
they would still have amenities?
Still have amenities, but certain amenities you would not want to pursue necessarily.
Because like an example?
There's
like a party room.
Party room definitely. Swimming pools we find can often be a source of exuberant costs, and not often used all that much. From our experience in our multifamily properties. And they might prefer a yoga room or meditation room or a gym, stuff like that. We would look at that better and more readily than looking at putting in a huge pool that wastes all this area, costs all this money, and just drives up your R&M, your repair and maintenance category within your operating expenditures.
Absolutely.
And it hurts the performance of the building. And this is the kind of advice that we would give to the condo developer who's looking at making that pivot, right? Parking's definitely something that you have to discuss as well, because parking is something that completely destroys projects for developers. And while people think that you're paying $100,000 a spot, the developer's making off of money, No, actually, no.
No way.
The cost of underground excavation, dewatering, shoring, it is astronomical.
So there's a reason why it's that price.
Yeah, they're recouping what it actually cost them to build that underground. Right? It's millions of dollars to build that. And you have to watch that with a purpose-built rental because you're not selling these units, right? It's being absorbed, capitalized and absorbed into the rents you collect on a per square foot basis. So you really have to manage that. And these are the things that we counsel in our RMI advisory basis, or rental market integration advisory service that we give to the developers.
So you're essentially consulting with them and giving them some tips on how to change, because there would be a whole new set of plans and drawings and all that, right?
Oh yeah, I mean we will take a look at your architecturals and your mechanicals, and we opine. We tell you, we're not going to be yes men and just we're going to, because I mean that's what you're paying us for. You're paying us to tell you where you might be costing yourself money or falling short on what we've done historically, and we're very successful at what we do, right?
No, I believe it. Is there a shift in, because I know a lot of what's suffering right now, condos are overall, in a bit of a slump, but the ones that are really suffering are those, investor units, 1 bedroom, bachelor units, micro units, or even, they squeeze 2 bed, 2 baths in like 600 square feet.
Yeah.
Are you guys, is that also part, I would imagine that's also part of the planning process. They move away from that. Are you guys recommending, larger units, like actually family size units, 3 bedrooms, that kind of thing?
This is a fantastic point, Matt. Like bang on. Thank you for asking that. And so let's talk about that.
Sure. Yeah.
The days of the foreign investor, the overseas investors coming on, Greyhound buses to a presentation center and getting Gucci bags and buying up floors of 350 square foot apartments or condo units that are really a glorified hotel room. Yeah, those days are gone.
Yeah.
Okay, those days are gone. And I think, the whole idea of the Airbnb and doing that kind of stuff has really, the dust has been lifted, the clouds, and they're not viable products, and they're not from a purpose-built rental perspective.
Right.
Unless you're in more of a student-oriented type campus or something like that, and you've got more of a communal living, you've got the room, and you know what I mean?
Yeah.
That might be a different thing that we would counsel depending on your proximity to a major campus.
Right.
But in general, no. We don't like bachelors at that size. And, to that effect, I've got a client of ours who's thousands of units, under ownership, and they have a building right downtown Toronto and in a great location, and, they're experiencing over 12% vacancy, 15% vacancy now in the building, but they're all those bachelor units, 300, 400 square feet. And, people are not wanting necessarily to rent those all that amount. No. So, I think if there's an ability to take a look at your floor plan and change things before you actually go through your SBA and pull that building permit, that's the time to do it. And I think we would, you may want some exposure to bachelors for sure. But not an overwhelming 60% of the building being built to those, and then those are the ones that you're, like I've got clients of ours who are developers who have gone back, not proceeded with their applications, gone back, and they're completely reworking their topology, their unit mixes, saying, okay, we had 62 bachelors that were all 350 square feet. Okay, now we've got 15 bachelors, and the rest are going to become 1+ dens or 2 beds. And so the unit count of the building will come down, right? But the topology in the unit mix will be better and will be more friendly to actually being family sized or, a reasonable person needs to live there and work there. So I see that changing going forward.
They should standardize, in my opinion, or create a minimum dimension for a den. Because I don't know if you've seen these dens. They're like
a closet,
a crack in the wall, and that's your den. And then I've also seen some dens that you could make into another bedroom. So I think there should be if you're going to qualify it as a den, there should be a minimum spec, because
it's under the building code and the planning act. I have to look at that. But,
I would imagine there is something like that. But I've seen, actually, to be fair, that might be a critique on some real estate agents, because they might be calling stuff a den that's actually not supposed to be called a den, which does happen, unfortunately.
Are we talking about misrepresentation, Matthew? I've never seen that before.
Not once. So, you know, and to your point
gorgeous
about,
views, a brick wall.
Right? we looked at a listing once and it said, CN Tower views, and there was nowhere near the CN Tower and not even in that direction.
No, but if you go down the street, turn the block, you can have a great view of it. Absolutely, it's a short walk.
Right. But to your point about bachelor units, you know, even if you do have a bachelor unit, just because you're a bachelor doesn't mean you want a 300 square foot unit.
No,
you know, doesn't have to have a bedroom, but at least have it, you know, a decent size, right? I think that's the problem. We have a lot of clients that say, I wouldn't mind a condo, but, you know, most buildings don't even do 3 bedrooms. Like Highway 7 and Jane, there's all those new projects. I don't think they have. I think the biggest units they have are 2+1.
Yeah.
In 800 square feet.
Well, there you go, right? Yeah. So look, I think that if you are going to look at producing these bachelor units, then in order to make it like work properly, you know, you need appropriate sized furniture, right? So, you know, whether they're Murphy beds or you need these type of things to be in there. Mm-hmm. So I think you need to provide that and reflect it in the rent so that somebody coming in there doesn't need to try to bring a king size bed and, you know, a kitchen table that's like, you know, I don't know, 8 feet long and put it in there and try to cram that into 350 or 400 square foot unit. For sure. If you furnish it and provide it and give the layout the way it is, I think you might have greater success with that.
I agree.
Right? That's design. Part of your FF&E, right?
The design needs to be there because just sometimes you could just tell they're designing it to fit the maximum amount of you know units in on a floor because you know you have the way the walls are, they're on an angle, and you know you look at a corner, you can't do anything with that. A lot of wasted space. Yeah. I think if things were, you know, more designed better with an actual function behind them, I think that would help too to maximize the square footage.
Well, that's also part of the difference you get sometimes with a PBR, purpose-built rental, versus, you know, a condo. There's, you know, like condos can have all these wonderful weird angles and go with the exterior of the building, and you know, where purpose-built we like to keep things typically very rectangular or square, so there's less, you know, waste. Smashing into walls and waste and stuff like that just drives up your R&M, right?
I think it just makes sense too, right? You know, people are living in these, not animals, right?
Agreed.
Yeah. So where were we? We're talking about size of the rentals, bachelors, that type of thing. Yeah. So I think that's on the way out, especially with the investors and all that. I think that's kind of dead. Yeah,
I see that only working in like a student-centric type play, to be honest with you. That's staying with a hotel or hospitality sector.
And then even then, for students, I don't think you'd be building a brand new project for student housing. Would you say that? Or
there's still some going on.
Yeah.
Yeah. I mean, they're very stringent with their location towards main campuses and things like that, obviously, right? So, but that's still happening. There's companies that are doing that. We're talking to as well for management, actually.
Okay. Yeah. No, I mean, students, that's a whole different market. I don't know if I'd invest in that, but
it is a different market for sure. Has unique challenges. I mean, with the international student thing being kiboshed, it puts a bit of a damper on it. But I think there's still an appetite for it from certain providers.
I think so.
We're talking with right now.
Right. So I guess maybe it's a good point, a good way to segue the current market. I know you're still a realtor, you're still well into the business, so I was just wanted your opinion, and you deal with, you know, rentals, condos, developers. What do you think is the real assessment of our condo market? Because freeholds,
crystal ball.
Well, I mean, for the audience, I think they already are aware, but you know, it looks like freehold's always king. Yeah. You know, it's already starting to show signs. Like our last month's market stats showed about a 1% to 2% year-over-year increase on freehold, especially detached. But it was positive for all the ranges. You know, mid-row town, semi, all that. But condos are still in the negative 1 or 2%. So I don't know if we've reached the bottom yet. It's not as bad as before, I would say, but you know, I'm hoping we're nearing the trough. What do you have an opinion on that? When do you think things might improve?
You're not going to like me, but
no, that's okay. Tell me. We need to know, right?
Yeah. Okay. So, from on the institutional side of things, from what we're seeing, I think we haven't hit that trough yet. To be very honest with you,
No,
I think that's
right.
coming. Right. I think that's late this year, early next year, we'll really see the fallout.
Okay.
And, I think Bank of Canada, we really got to watch what Tiff Macklem's doing. There's talk of 6 successive rate cuts. Now we've got
tariffs.
Possibly 25% tariffs looming. How does the market react?
Right.
He's going to have to really, really rein it in on these in order to spur any kind of consumer confidence moving forward.
Right.
I don't know that we've seen the end of the receiverships on the condo side yet, to be very honest with you.
Right.
I'm fearful that we may see more.
Right.
And even when that gets done, there'll be a 40,000 unit glut that'll have to be absorbed before the new product starts to get absorbed.
Right.
But because of the pullback and the absolute pause from all new condo developers from moving forward with their projects, there will be a period of time where, guess what? There'll be no inventory. There'll be a shortage again. Right.
So it should self-correct, hopefully.
It should. The question becomes: is it 2 years? Is it 3 years? Is it 5 years?
Anyone's
crystal
guess.
ball,
Yeah,
right?
no one
Crystal
knows.
ball. I really don't know.
Yeah. It's definitely not now. I think it's safe to say it's definitely not going to be this year.
Oh no.
No.
Look,
I've talked to some agents. We had a client that bought a while ago, a little bit ago, wants to resell, but I did some research. I spoke to some listing agents, and they're just like, honestly, dead is an understatement for condos right now. There's competition, and these are not even like brand new builds.
these are resales, right?
These are resales,
Yeah.
and good resales, not crap, right?
Yeah.
So it's, if you don't need to sell right now, you need to hold. But sorry, go ahead.
I'm going to agree with you there. I'm going to agree with you. If you are a condo owner or you are contemplating becoming a condo buyer, there will be the pick of the litter for you to look at very shortly.
Yeah.
So the buying power, they will shift to a buyer's market on the condo side of things, 100%.
Yeah.
How long will that be? How long will that last? What will it look like? How much more compression are we going to see in sale prices? Time will tell.
Right. And you can't time the market.
No.
No.
So for me to offer you a date or an opinion, I don't know. I don't know. 3 to 5 years.
Right.
I think that's what we're hearing on the street.
Heard that as well.
3 to 5 years from our analysts and everybody that we work with on Bay Street, and that seems to be the collective opinion.
Right.
And that's why I think you're seeing. Look, the large condo developers who have the capital structure and the stack to be able to sit back and wait, they'll do that. They'll wait. The ones that are leveraged to the tilt and have to make moves forward, they will. And whether that will be pivoting to rental and working with guys like me, happy to meet you.
There you go. There you go.
That'll be the case. Or there may be some that end up in receivership, or there may be some that end up in fire sales. Time will tell. We'll end up seeing how that all works out.
Well, I might be wrong on this, but I think what might happen, and I'm curious to know your thoughts. I think there's going to be a divergence, if there's not one already, between condo markets. I think it's going to split, where we're going to have those new construction style condos, and then we'll have the more, let's call them traditional style condos, a little bit older, or projects that were actually designed well, good units, well laid out, 2-bed 2-bath, 900 square feet, 1,000 square feet versus the 600 square foot 2-bed 2-bath shoebox, with like a half wall for a kitchen, micro appliances. I think there's going to be a difference, right? I think those products are going to suffer, and I think that, let's call it the higher end of condos will maybe not suffer less.
Well, that's going to be it's going to be great for the realtors who, I'm still have a license, but I'm not.
It'll be a good
active.
challenge.
I'm on the commercial side of things, but I think for the condo realtors and the realtors who specialize in the downtown core, and the buyers are really going to need to start working with realtors who really know their stuff, like you, and others who really understand that there is a dichotomy. There's a difference, but a condo wasn't just a condo. This building was built, and this building was built 2020 by XYZ developer, and they have this many bachelors, and that's why the values in this building are lower than when you go to this building that was built by Tridel 10 years ago, and it has less of that. Like there's going to be a valuation difference.
I agree.
And you're going to start to see that more pronounced, I think, moving forward.
Oh yeah. Well, maintenance, the maintenance fees are very key. How things are run. Reserve funds.
Yeah.
The other year we didn't even get as far as an offer because they had status on hand, but we shied away from it because there was like a pending lawsuit for building defects, suing the builder. The condo board was suing the builder, so we just said, you know what, because you know what happens, right? If they lose the claim, then the owners need to pay.
Yeah, you get a bill. It's called special assessment.
Yeah, and it's usually not a small fee. So
no.
And there's lots on the market. So why would you force yourself into that?
Hence the reason of having a lawyer actually review your status certificate, working with your realtor. Like it's important if you're going to be a condo buyer.
Absolutely.
So that's what I see moving forward. That's what we're hearing, on the street and with our analysts and whatever. So I think that it is timely for us at Holt Meadow Group to offer those services.
I think so.
To the development community that just maybe doesn't have the capital structure to be able to wait that 3 to 5 or whatever it ends up being for the correction to come, and would like to explore the opportunity and the idea of moving towards a purpose-built rental.
No, but I think what you guys are doing is smart. I mean, it's awesome.
Thank you.
Nimble was a good word. That's rare in business, unfortunately. So
well, listen, when you're like, if you're a boutique and you're able to look at things from a different lens, you're able to provide these services or not be a market disruptor, but along those lines to add something different that isn't already out there.
Well, you're responding to the outside conditions, right?
Yeah.
You see a need, and that I think that's where you're pivoting in real time, and I think that's smart. I think a lot of people need to do that.
I think at Holt Meadow, like with our team, with Oren, who's our CEO, Oren Turkinitz, and Daniela Douglas, who's our senior VP of operations, and Maddie and Alina, Mark, the whole team. I think we're poised very well to offer these services to people and help them through this period.
Yes.
And out of a result of that, what do we hope? I mean, obviously we want to grow our business, so we're doing that.
Of course.
But we might have people that say, hey, you know what? I might want to do another purposeful rental.
Yeah.
I mean, the adage, condo was king for 20, 30 years, right? Where being a landlord and owning and building purpose-built rental was just not in fashion. It wasn't in vogue. Nobody wanted to do it because you had rent control, you had all these other things that were really prohibiting you. And on a business model, condo developments and condo developers are more IRR driven, where being a landlord is a little bit more of a drip type thing.
Longer term.
People, there's more equity required, there's more this, there's more that. With the government incentives, with the new financing plans, with the way things are working right now, that equity gap has shrunk, actually.
Okay.
And so it actually might entice some, and the reason it's important is because these developments are valuable units for our shortages.
Yes.
We want them to be built and serviced to our community one way or the other, whether it's condo entitlement or whether it's purpose-built rental.
Right.
It's a unit and it houses somebody, and we need that.
Absolutely.
Right?
Desperately.
So that's why I think Oren and myself and Daniela all came together and said, hey, we have the ability to offer these services. We're going to do it for our community. And we're thankful for the business that we've had from the people that have entrusted us to do that for them this far and looking to grow,
Absolutely.
Yeah.
Absolutely. Well, I think that's a good segue to finish. What do you think?
I'm happy. I'm happy to end if you're happy.
Okay. No, not a problem. Well, Matthew, thank you so much for coming today.
Thank you very much. Yeah.
Well, hope to do this again sometime soon.
Love to. Thanks a lot for having me.
Thanks a lot. All right. Goodbye, everybody.
Bye, everybody.